Time to check in with Amanda Lang. She, of course, is the CTV financial chief. Can I call you that, Amanda? Is that okay?
Sure.
Okay.
Call me what you want.
Fine. Chief Financial Officer. We talk business every Friday afternoon. So let's start with what came out actually today. Employment numbers in Canada, which at first glance look okay, but when you dig a little deeper, not so much.
Yeah, I mean, of course, we're all sort of bracing to see what the impact is of tariffs and uncertainty and business investment, and that's the big question. And we are starting to see a little bit of weakness. Of 7,400 jobs added in April, our unemployment rate did tick up, and that's kind of, this is sort of the concern is that businesses aren't going to hire, and in fact, we may well see layoffs. Now, it was better than expected. People were looking for a weak month here, so take that as you will, I guess. But I was really struck by the manufacturing industry with 31,000 positions shed, and that's even before, Aaron, we get some of what we know is coming, right, with lines being closed down at GM in the fall. So there's going to be some of this for sure. I guess what I would say is this could have been worse.
Yeah, and they keep warning us too as well, right? I mean, we know now, waiting on interest rates, that we're going to have to sit and wait for a while because that manufacturing loss now is in all likelihood only going to get worse.
That's right. We're likely to see that, although, this feels a little bit to me like holding in place. I'll tell you one thing that was interesting to me in April was hourly wages up still 3.4%. That's a good news, right, for workers. That's catch up. It's ahead of inflation right now. So one thing we have seen is that wages have kind of caught up with at least the aggregate price increases of the past few years. So this is a sign of strength. Is it too much? Is that going to worry the Bank of Canada about it being inflationary? Potentially. It's a little hotter maybe than they'd like to see.
Meanwhile, in the U.S., a lot of people waiting, of course, there. Although, again, I don't think that was much of a surprise. The U.S. Fed decided to hold steady on interest rates, despite Donald Trump warning, I guess it was Jerome Powell, you better drop rates, you better drop rates. But again, thankfully, nothing happened.
Yeah, I mean, I think that the hold makes sense given everything that's going on. The Fed is kind of feeling similar in some ways to our central bank, which put out its financial stability report this week, which is really just their rising risks. So even though the economy still looks pretty good, they see the potential for downside. And one thing we definitely know is, you talk about kind of shoes to drop here on manufacturing and job losses. Well, in the States, there are real shoes to drop in terms of empty shelves and shipments of goods that are not coming from China that were going to come from China. So container ships that are empty, things that are being warehoused in other countries, that could all show up in the next few weeks if we don't get resolution on this still very high trade war between China and the U.S., right? The tariffs are 145% on Chinese goods. So that is something that could hit that U.S. economy. So it made sense to me for the Fed to be like, we're going to keep our powder dry, but we're ready to act if we need to.
I thought I saw Donald Trump tweet something out at you this morning about the U.S. now. He's talking about Scott Bessent, or Bessent, however he pronounces his name, their Treasury Secretary, now negotiating that 145 down to 80%. I wonder what you think about that.
So I will tell you that the idea that they're talking is a very positive thing. And the fact that they did get a deal done in the background with the UK has made me much more optimistic that things are happening. There's conversations being had. And 80% is still too high. It's going to be too high for China. It would be too high for anybody else. But it's an opening position. It just tells you that they're getting closer to getting their heads around some kind of negotiation with China, which we need to have happen. So far, of course, China's been very steadfast that they're not making the first move. And until tariffs come down, they don't want to talk at all. So this is maybe a bit of a loosening of at least the rhetoric that we're getting out of the White House. I was struck by that actually, again, with that UK deal. The tone was just better, right? It acknowledged that the UK has an economy that needs to protect its jobs and some of its industry, and that just makes more sense to talk that way.
Although I will tell you, in sort of watching some analysts talk about this, and sadly this becomes so political, you can't tell if you're getting really good analysis or if it's politically based. And I saw someone last night discussing the U.S.-UK trade deal saying, well, if you look at the finer points here, there are very, very few details in here as to how this is going to play out. Other than, I think the big thing was the UK commits to spend $10 billion buying, aircraft, whatever, from Boeing. Mm-hmm. But beyond that, not a lot of details in here. So it's kind of like, Donald Trump will chalk this up as a win, even though we don't really know exactly how this is going to play out.
Yeah, it's a very good point. There's still obviously a lot of negotiation to do on the finer points. What I would say is, the tone does matter. I think it cools everything down a little bit, but the bottom line of 10% is the tariff baseline. If you read Project 2025, that's about right. That's what they're headed for with most of us. So that made sense to me. And then, that they're acknowledging that, the UK makes cars that they want to protect. So we're going to allow them to do that. As a Canadian, it gave me some comfort that they might have the same view of, let's say, our auto industry, that we also have an industry to protect. They might not, because, of course, those are American companies doing business here. But I agree with you. There's still details to be worked out, but tonally, it's the right direction. It's the right tone. I felt better yesterday than I have in a long time.
Yeah, and I guess, at the end of the day, it is something, and maybe we can take something from that in Canada, that if they're willing to do this with someone like the UK, maybe they come back to the table and we can actually start to see some change as far as our relationship with them is concerned here.
I think so. And because it came on the heels of that meeting where, again, the tone with Prime Minister Carney was better, right? It wasn't bombastic. It wasn't negative. He wasn't trying to bully anybody. It just feels like maybe that's specific to the Prime Minister, but maybe it's just the White House is getting a little more realistic and they know they have to take a better approach. And so we're going to all be the beneficiaries of this.
So last thing I will ask, I know we've talked about the Canadian dollar, which had a bit of a run after the whole Donald Trump tariff thing started. We got up a little over 72 cents. I know we've fallen back now. Can we expect that to continue happening? The more trade deals are done, this will hurt the Canadian dollar. It will hurt in a good way because, of course, it makes our exports less expensive.
Yeah, I mean, I think because really what's been influencing the Canadian dollar was surprising U.S. dollar weakness, right? So it briefly wasn't the reserve currency of choice. People were actually selling U.S. assets, and therefore they didn't need the U.S. dollar. So I think that will reverse if people kind of say, okay, we're going to start to be sensible here, and there aren't madmen on the loose in the White House. There's actually, there's a plan.
Don't get carried away.
Okay, maybe they're less mad, but if a 10% across the board tariff is what they have in mind, and that's what they're gearing towards, I think the U.S. dollar gains strength again because people will say, all right, we're back in business, everything's going to be fine, and then our dollar will go back to where it was. And in fact, a 10% tariff will create a kind of I don't know how to put it, but a permanent weakness in our exchange rate, right? So it'll put us down a little bit. Otherwise, and as you say, there's pros and cons of that. For people who are buying U.S. priced goods, not so good, but for our exports, they look attractive, which is important when we have tariffs in play.
Last question really quick. You want to take a whack at what's going on with oil?
Yeah, I mean, oil it's a kind of a proxy for the global economic outlook. So it's been weak because there's an expectation that global growth will be weak. If the trade wars settle down globally, I think you'll see oil revert to a better price. But then remember, it's also driven by cartel pricing, right? The supply is very much controlled. And so that's one thing. If people reduce their output, we will see a firmer price of oil as well.
All right. We'll leave it at that. Amanda, thanks so much. Have a great weekend.
Great to talk.